Hello and welcome to Moose Meets, where I sit down with various protocols to explore their innovations and what sets them apart. And of course, we'll be digging for some exclusive alpha for you, so make sure to lean in and stay tuned to ensure you don't miss a thing. Without further ado, let's jump right in. Hello and welcome back to another episode of Moose Meets. Today I have Devin, co-founder of Gammaswap Labs with me. Hey Devin, how are you doing?
Hey, really excited to be here. Thanks for having me, Moose. And doing great.
Yeah, awesome. I'd love to hear your story and of course about Gammaswap, but before that, could we get a quick introduction of yourself and what Gammaswap Labs is?
Yeah, so Devin here, one of the co-founders of Gammaswap, mostly responsible for BD and growth. And then what Gammaswap is we're the first on-chain perpetual options protocol. And we do this by leveraging AMM liquidity for the option trades.
Mm-hmm. Awesome. And how did get co-founding Gammaswap and how it all started?
Yeah, so I'm not the inventor, but one of the co-founders. So take you guys from the beginning here. But the CEO of Gammaswap Labs and part of the core team. Yeah, his background, he used to be on Wall Street, was a trader at Goldman, and then a software engineer in another bank, and then was a quant at UBS, been involved in crypto since 2013, and did some market making on Coinbase in the early days. But when, AMMs kind of came out, he thought they were, the greatest thing. And at this point, actually, he had left UBS in 2016 to trade his own strategy. So he was providing a lot of liquidity during DeFi summer when the yields were super high. And as the yields came down, after a lot of the incentive programs ran out, he started to do the math on how profitable it actually was to provide liquidity and realized it wasn't that profitable. And yeah, it was actually pretty interesting. I think a lot of DeFi protocols came out of this time because I was listening to TN from Pendle, his podcast on the Defiant, and they had a kind of similar thing. So they, Pendle, they wanted to lock in the yield. Gammaswap, we wanted to do something different. The idea came from actually shorting the yield, that the yield, wasn't paying you enough. And so you want to take the opposite side of the bet. But there wasn't any way to do that. And that's where the idea for Gammaswap started to come in. So this has been in the idea phase since 2021. This smart contract started in 2022. And that's where I kind of came in. So I was previously at Figment before. Figment does a lot of institutional staking, some investment in proof of stake blockchain. So I was responsible for some more institutional partnerships and doing some developer relations. We were at a hackathon where I was helping judge the bounty for the hackathon and for the DeFi sector. And Gammaswap was there. And I thought what they were doing was really interesting. So I had provided, liquidity in some pools. And so I thought the whole idea of hedging your impermanent loss is really cool. And then met just in touch with the team. The product was really powerful. So I've been involved with the team now as a co-founder for a couple of years. Yeah, since then, we've raised a seed and then we've launched since January of this year. So yeah, that's kind of the story right now. We're allowing people to short the LP in a straddle with long and short, but we have our TGs coming up soon. But after that, we have a bunch of cool new products that we're also going to be building, which I think people are going to find really interesting. We'll even give some early alpha on this podcast on those.
Yeah, I'd love to dive into the strategies, but before that, I want to just ask what's the difference between perp options and your so-called normal options, or maybe you can dive a bit into what are perp options in the first place.
Yeah, this is a fun one, an interesting one. So yeah, I guess, we'll go to perpetual futures because I think all these kind of perpetual versions of the TradFi products are very different. So actually perpetual options were something that were theorized since the 90s by Robert Shiller. The whole point of, his theories for perpetual options were actually to create options markets on super liquid assets like art, single family homes, things like that. There's some OTC perpetual options, I think, in TradFi. They don't have much liquidity. They're not really super popular. And so there's never really been a perpetual option. So the reason we call them perpetual options is, similarly with perpetual futures, there were some traditional features before that. There was an inverse Bitcoin futures contract that was semi-popular on sexes, but it had physical settlement, daily settlement, and multiple expiries. And so what perpetual futures did was that they aggregated all of the liquidity to one contract, essentially. and made the product simpler and then more liquid, which, yeah, now they've done like trillions in cumulative volume. But the interesting thing about perpetual futures is that they're not actually like a future, because, the future, how it's defined is you have the obligation to purchase an asset at the expiration date. So in perpetual futures, there's no actual, buying of the assets. It's all virtual tracking of the spot price, but it essentially works exactly like a future. And so, yeah, that's where the name comes from. And I think in some ways, perpetual options are kind of similar, because what we realized was, all these liquidity providers and AMMs are essentially selling options perpetually, right? That, you're short volatility, which is like selling an option. And essentially, as people are swapping in, you're filling those prices essentially. And the AMMs rebalancing with that. So it replicates the dynamic kind of like hedging that option market makers do. But it's not the traditional definition of an option, which is like, you have the right, but not the obligation to purchase an asset in the future. So that's why we call it a perpetual option, because when you essentially borrow liquidity from the AMM, it's mimicking long options, but you're not actually purchasing the asset. It actually works more like a lending market in the back end, but it's mimicking those returns essentially totally. You can create any virtual strike price or expiration via it, and you have very similar returns. And there's a lot of similarities between why people would trade options versus futures in the case of perpetual options. So, in TradFi, similar to perpetual futures, like futures markets are, they're super popular, but they're only on some assets like commodities and some ETFs. Yeah, although options are more complex, retail likes trading them because they're on the stocks that they trade. Mm-hmm. And so similar to like why retail might trade perpetual options versus perp futures is that although perp futures, are very simple, they're only on assets that are supported by Oracle or SEX, while Gammaswap we don't rely on Oracle. So anyone can create a pool with any asset like Trump, USCC, Bowden, USCC, I don't know, you name it. We can have a market for it as long as it's the ERC20 token. Even though it's more complex, you have kind of like that exposure. You don't have the same price-based liquidation risk, the same margin risk. And so, there's a lot of similarities, but in kind of like a DeFi native way and a new way. So it doesn't fit the traditional definition of an option, but it's essentially an option. You have that optionality. You have a lot of the same return and risk profile of a traditional option, but in a simpler product where a lot of that liquidity is aggregated and works within DeFi.
Gotcha. Man, imagine like having options on meme coins, I think that would be insane.
Yeah, I think it's something we're hoping for too. We had some markets that actually people were pretty excited about, like Boop on Arbitrum, Pepe on Arbitrum. I think the interesting thing about meme coins initially is that, a lot of the projects provide liquidity. And then, as they become more popular, like a Pepe or maybe like a WIF, other people will come in. But it's kind of when it's more mature, just because that risk is super high. So I think as Gammaswap gains more liquidity and more people are, familiar with it, we can have projects launch like from the get-go on it. I think, it's a little bit like the ideal place is that, we get on like there's like a checklist of things people do, to launch on like UniB2, for example. So if we could become part of that checklist, it'd be great. But I think that's the difficult part about meme coins is that, liquidity is pretty centralized. It's mostly just like the project team providing it. So it's going to take time, I think, to really get adoption there. But I think that's like a huge, differentiator between Gammaswap and other types of like derivatives is the kind of like long tail assets we can support.
Right. Yeah, I think liquidity is like one of the issues, within the option space right now. What do you think?
Yeah, I would agree. I think each protocol has it depends on the type of protocol. You have your challenges. So I think traditional options, why they become difficult is, before perp futures, there wasn't much of a derivatives market, even in futures, which historically has been more liquid and more volume than options. Actually, in TradFi, it's only really until COVID, futures were the more popular product, but now options are so much more popular. Like last year in 2023, the total open interest of options and the volume was 3x futures, and it grew 100% year over year. globally versus futures, which basically stayed the same year over year. So huge options growth. And then, but the problem in crypto is, it's a little bit lower liquidity than TradFi, and especially on chain, things can become hard just because it's harder to make markets, things are less efficient, things like that. So the problem with futures before was you had multiple expiration dates, and perps did really well because they aggregate all that liquidity. Now with options, you have multiple expirations and you have multiple strike prices. So it's probably the most fragmented like derivative product that exists. I think that's why adoption for it can take a long time. And so Deribit has been done really well. You know, they typically have like half to 2/3 of the open interest of futures, depending on the market conditions. Sometimes it's even flipped futures, but on chain it's been really hard. And I just think, there's less liquidity on chain, and market making is very difficult. And when you have so many, like fragments, it becomes much more efficient. So I think Libra has done a good job, but especially with some of these structured products, but it's still super small compared to these other products. Like I think there's only like 250 million in TVL. So the cool thing about Gammaswap is that we don't have those same problems. You can create any strike price or expiration from one pool. So there's no fragmentation across that. So as long as there's liquidity in the pool, there's liquidity across any of those types of trades you would want to make. I think the problem we have is more like long tail assets, like getting liquidity for those. Because it's typically just one project creating that pool, and that's where all liquidity sits. And then because there's so much like IL risk, not a lot of people want to LP into that. So you could hedge out with Gammaswap. I think we're going to create more products to make that even more efficient, but that's, a sophisticated strategy that not maybe a lot of our retail participants are going to do. So I think, besides becoming more well-known and having more projects launch on us, I think the other thing we can do in the future is, create like hedging, basically buying insurance on these positions so that more people want to participate cheaper, and then creating structured products where people wouldn't even have to like manage this. They could just, provide liquidity in a vault, and it would do some hedging for them, and they would just collect a yield. So I think we're close to getting there. After TGE, we're going to be creating more of these products, but finding like full PMF in the trade, like the way people are trading with the product is important. So I think once we get to a strong place there, then we can kind of build on top, making sure we have like the ideal way to interact with the contracts is like our biggest priority right now.
Gotcha. You mentioned things like, having more adoption and like solving the liquidity issue in on-chain option space. How do you see that happening? Or like what do you think are possible solutions to that?
Yeah, it's a good question. I won't speak as much to traditional options because it's not our area of focus, and I think there are other challenges. Maybe just generally like better infrastructure, lower latency is like one thing, and then creating, having retail participate, because DeFi is more retail than like sexes. Well, depends on the sex, but definitely a lot of retail initially with interacting with protocols. So creating more like structured products to allow retail to participate. So that's what I'll say on the traditional options. But for perp options, it's kind of a new category. We're really the first protocol that I know of to do this. So I think that poses unique challenges, like when there's not really a precedent to look to. So I think for us, just finding the right products that people want to engage with and making it as capital efficient as possible. So right now, I think we have a product that you can get a lot of gamma exposure to, but a lot of people, they want to trade the delta or the leverage. So that like our product right now is like, if you want to hedge your impermanent loss as an LP, it's great for that. You don't even have to give up much of your yield. You can hedge all day rebalancing. And then if there's a lot of volatility, it works. But in smaller price movements, to get the amount of leverage some people want, you have to pay a good amount of funding. So we're going to keep the current product, but we're going to also add additional products where people who want to trade more just for leverage, the delta, and care less about, they either want to hedge the delta, they don't really care about hedging the gamma, or so like similar to Perp, how people might hedge the delta or just trading with leverage based on like events or their like ideas of the market, it's going to be much more viable to do that. So I think, like kind of like traditional options, you can do, there's lots of strategies you can do and ways to interact with a platform. So we're going to be extending like the use cases that people could use it for and the ways you can interact with these contracts. But I think in a more abstracted way than like a traditional option, something that looks pretty much exactly like a perp features interface, but you're not going to have, the P&L is going to be a little different. You're going to be more covered on the downside. You're going to be able to get up to like 10 to 15x leverage, and then you'll have no liquidation price. So it's not exactly like a perpetual feature, but it's more like a call or a put, where you're just setting the leverage in our like current product.
Right. Okay, gotcha. And maybe we can jump into your current product right now. You mentioned there are like multiple strategies that are available for users right now. Could you go through with us what are some of the strategies that we can do with Gammaswap right now?
Yeah. So in terms of actually trading with the platform, if it's not part of like more advanced strategy, if you're just trying to trade, we have a straddle, which is essentially what we're doing is we take the LP position and we burn some of it. And then we hold the underlying collateral, let's say it's ETH and USDC in a 50-50 ratio. And so if there's any impermanent loss, basically when you remit the LP, you don't have to pay as much. So you can keep the difference. You essentially short the LP position. And so that's a way you can get long volatility exposure without any price risk. Not only is there no price-based liquidation risk, if the price goes up or down, you'll profit as long as it's higher than the like funding or borrow fees you're paying. And we, instead of a expiration or liquidation price, you have a time to liquidation that's measuring how long it'll take to cross the LTV threshold of 99.5%, which is the same across all pools on Arbitrum. The LTV threshold is slightly different on Ethereum. But that's the straddle. And then we have a long and short position right now. So essentially those are actually straddles rebalanced to look like more like calls or puts. So in the long position, where it's instead of being a 50-50 ratio of the two tokens, it's 66%, in this case, let's say ETH and 33% USDC. So oriented more towards the more volatile asset. And then the short is 33% ETH, 66% USDC. So it's oriented more towards, the more stable asset of the pool. So you're replicating like a short position. So these are still straddles. So if the price moves against you a lot, you'll profit. But if it moves against you a little bit, you'll lose. But you don't lose. You're punished less than like a perpetual feature. It's, there's some like convexity there. Yeah, it's not like Delta One. So you're not going to be fully like, if the price goes negative 30%, you're not necessarily, negative 30%. It could be like negative 15%, for example. And then if the price increases, 15%, you could be up like 30%. But as the more right you are, the more leverage you get. So let's say, the price moves 15%, you have 2x leverage. If the price moved 100%, you'd be up 500%. So now you have 5x leverage. So the leverage is changing as the price changes. So, but I think, for some people, it's a little bit complex because you're not just long one token in the pool, like one token. You're actually long, you have exposure to both tokens, and your debt is in the invariant of the AMM. So the X times Y equals K formula, which I think, it's hard for people to think that way. And a lot of people's strategies, they just want exposure to one token. So that's why we also want to extend the various amount of products we have. But for something like hedging impermanent loss, it's really the only way you could fully hedge the IL of an LP position. So for something like Uniswap V2, if the notional value of your straddle is the same as your LP, your IL is fully hedged. So what that means is, if I go into that position with 1 ETH and 3,000 USDC, I'm going to exit with 1 ETH and 3,000 USDC, no matter where the price goes. So I'm not exposed to any of the rebalancing anymore, which, if you're a fund, you want to hold on to the amount of like tokens you have and you don't want that to change at all. You can hedge all that. And you could also, hedge a delta somewhere else using a perp or a money market. So in those advanced strategies, it can get really interesting. But I would say there's definitely not all participants in the market. I'd say like there are a lot of participants that are just looking to get leverage, or they're trying to hedge a token, only one token, whether it's something like a blue chip like ETH or a token that has no derivative, like there's no derivative for it, right? Like those long tails we were talking about, like Trump or Bowden. Maybe you want to go short, or maybe, you have some reason you want to hedge that risk.
Mm-hmm.
That's a way to do it. And I think that's really interesting, because the whole like thesis on this is that that's how we can help increase like on-chain liquidity, because like institutions or sophisticated people or anyone, right? Like, insurance is something we think about all the time, right? Like you buy a car, you get insurance on it. You buy a house, you get insurance on it. And, maybe not everyone in the market is doing this, but typically, if you're a fund managing capital or you have a large portfolio, you want to hedge some of your risk, whether you're buying an option or buying an asset. And so I think if we can allow people to like hedge these longer tail assets, it won't just be like the project founders providing liquidity anymore, right? Like other people will be willing to participate because they have a way to reduce their risk. And meme coins are great. Like I think culture coins are amazing. We've seen like a lot of growth in blockchain from them, but I think the liquidity is a little bit limited because there's no way for people who want to, market makers or anyone else who wants to come in and get some exposure, but, reduce their risk to do that. And that's where Gammaswap is really amazing. And then, if you're someone who maybe just wants to get some leverage on a meme coin, throw some money at it and hope it kind of like moons, this is a way to do that too. So I think it helps, kind of like, people talk about like the barbell effect. It helps like both sides, kind of like retail that's just getting in the markets and wanting to get some leverage, and then also institutions or sophisticated individuals to use it. And maybe if you're a new project too, right? Like maybe you have like a couple 100,000 that you could provide liquidity, but you're scared that you could lose all that. Like this is a way as a project to be to actually provide even more liquidity than you normally would, because now you don't have as much risk, right? Because a lot of these meme coins can go up tremendously, but a lot of them also go to zero. And maybe that's a reason why some of these projects only have like 20 or 30K liquidity instead of a few hundred, because people don't want to risk all that. But this is a way where someone could actually come in and provide more and just hedge it out so that there's more liquidity for other people to interact with. People can enter with more size, or just create like a healthier market structure. So for whatever reason, I think more liquidity is good. So these are the things that really get me excited about Gammaswap and where I think like the true potential is. So like one product I've looked up to a lot is Pendle, because I feel like we're pretty complex, and I think complex products take a little bit more to adopt. But if you have a good vision and you truly feel like a product can make a difference to people, I think, as long as you take the time to find the right product, then you can see some growth in the market. And so I've looked up to Pendle a lot, because I think interest rate swaps are something that are pretty complex, but like in TradFi, they're the biggest derivative product. They have like 500 trillion right now in like cumulative volume, I believe. Not cumulative volume, I think just like actual like open interest out there right now. A lot of this stuff happens OTC. So it might not be like visible in the books, but like huge markets, like the biggest markets that are out there. And so it just made so much sense for it to work in DeFi. So it's great that, Pendle found product market fit. And I think V3 is going to be huge, I think a lot of their growth was on points, but I think V3 is going to be massive. And I'm very excited for them. I think they're not financial advice. I'm not even talking about the token price, but I just think the protocol is going to continue to see a lot of growth. I think, easily a top 5 protocol in the next like 2 to 3 years consistently. So really excited for what they're doing.
Yep, me too. Right. On the note of strategies, since we're recording this on the day of the ETH ETF, by the time this goes out, it'll be a few days in. What are some of the strategies that you personally are considering, or you might already have, using Gammaswap?
Yeah, right. Like I think, I guess for those who don't know, like why we call ourselves Gammaswap. So people, of course, are familiar with the price, right? When you start taking the derivatives of price, that's where some of these Greeks come in. So delta is the first derivative of price. So that's just measuring how much a contract will move according to the underlying. And so perpetual future, that's delta 1. So if you select 10x leverage, that means if the price goes up 1%, it goes up 10%. In Gammaswap, that delta is not static, which I think, makes it a little bit more complex. Also the 2 tokens, but that's part of it. And then if you take the second derivative of price, so the derivative of delta, you get gamma, which is measuring how volatile things are. So the reason why something like Gammaswap makes more sense for trading gamma than a perpetual future is because you're rewarded by volatility. So as the volatility increases, your leverage increases, your returns increase. And also there's like interesting properties where, you don't have liquidation price. You can profit if the price goes either way. And so that's what makes, I think, events like the FTETF, really interesting to trade on Gammaswap, and why you often see like options, like Deribit and other options protocols pick up a lot across these events. Because, for example, like with the BTC ETF, when that was announced, you had a huge kind of price increase, if I remember this correctly. And then actually when it launched, the price decreased, which I think, was kind of odd for people. But these events sometimes trade in like odd ways. And depending on your views on the FTTF, you could say it could go similarly, or maybe, it'll continue to increase. I think there's reasonable cases for both. But either way, I think people suspect that it's going to be a volatile event for the markets. And so that's why trading on Gammaswap is really interesting, because, you're predicting volatility. You might not know which way it's going to go, or you want to be more protected on the downside. You can come in Gammaswap and benefit from that. So you could have a straddle where you benefit if the price increases, dramatically either way. You could have a long, so that the more volatile it is, the more you're rewarded, but your downside's more limited. And then the opposite for a short. So you're rewarded for you can just basically say, okay, maybe I'm not super sure about the price direction, but I know there's going to be volatility. And so that's where like Gammaswap can really shine. And I think why we often see, like, even though, we're not a massive protocol yet, around like certain events like this, we see a lot of people coming in to the open interest kind of like picking up a bit, because people are wanting to speculate in these kind of like unique ways.
Yeah, for sure. Like, assuming we have more of this kind of news upcoming, which I believe there will, and since you guys can be listing kind of any long tail asset as well, I think it'll be interesting to see like what kind of strategies we can use.
Yeah, right. So you could trade ETH, or maybe you want some ETH beta like Pendle. Maybe you think, Pendle is going to move a lot from this because you have all these institutions that are going to hold ETH and they're going to want to yield on it. So, maybe people are going to buy Pendle a lot, or Pendle will go up. You could also speculate on that too, in unique ways. We actually see like our Pendle market. It's not the highest in open interest because liquidity isn't as high as ETH, but we see a lot of trades. It's probably like one of the higher volume pairs, like a lot of trades going in and out, because Pendles, they've been experiencing some volatility, and some interesting events are probably affecting them. And so I think a lot of people want to speculate on those. So I think that's, one way you could also trade it as well, is maybe you don't want direct ETH exposure. You have a thesis on a protocol, right, that has to do with ETH, and you think it's going to move more, so it'll benefit you. So that could be like a great way to trade. And we don't have liquidity for every asset yet, but we can support any token. So you could just create a pool, or if their pools are out there, like trade against them.
Right. Now I want to talk about your other product, the Earn product, for the non-traders. So what's that about? How can users provide liquidity, and what's in it for them?
Yeah, right. So I guess one of the controversial things about us, seemingly controversial at least, is that, I don't think we're not super big fans of Uniswap v3, like that style of concentrated liquidity. I mean, putting out more content on how to hedge v3 positions using Gammaswap. But the reason we don't think it's like super great is one, we've seen like a lot of the flows and a lot of the capital, it's mostly institutional. It's not much retail. A lot of the empirical analysis on providing liquidity shows that UniV2 is still more profitable, especially hedged, because there's less like toxic flow. And Uniswap V2 has way more pairs. So we think, Uniswap V2 has been a bit neglected, but that's like the true retail product, because in TradFi and even in DeFi, the passive products are the ones that get the most liquidity, right? Like Lido, Aave, Pendle now. And then the more active products, at least from the liquidity provisioning side, it's harder because there are less participants that can participate and there's more risk. So yeah, we feel like Uniswap V2 fits into that product more. It's less risky, more passive. And then, we've seen, some products that are more retail oriented, like on base, like Aerodrome, get a lot of liquidity in these full range or the concentrated liquidity. So we think it's a better retail product. And then I think the trade-off that UniV3 made about not being composable anymore was, we don't think it was a strong trade-off. Like we've seen a lot of the cycle leaders this cycle, they rely on composability in DeFi, EigenLayer, EtherFi, Pendle. Pendle V2 supports only composable yield-bearing tokens. So we think that's the way. So our first, right now, if you want to provide liquidity, it's all UniV2 style. So you have the same risks as the UniV2 pool, the same IL, and all those tokens are composable ERC20 tokens. One difference is if, like a lending market like Aave, if the pool is overutilized, you might not be able to withdraw your liquidity immediately. So like, let's say there's, $1 million pool and then 900K has been utilized and you have a 200K position, only 100K is available to be withdrawn at that time. So I wouldn't necessarily call it a risk, but that's one thing to take note. If you're in a small pool or a large capital provider, that is the case for Gammaswap, but it's not necessarily an economic risk. So, but basically the same risks as providing liquidity in Uniswap V2. Now, of course, concentrated liquidity is great because it allows more efficient swaps. And then the case of Gammaswap will allow more leverage for our traders. Now, we've identified creative ways to increase the leverage for traders without increasing the IL risk. We're going to be, that's what we're going to be doing for our new fixed delta product. But in Gammaswap V2, it's going to allow us to create even more leverage. And it's a new type of AMM that has no ticks or ranges. So, we haven't started work on this yet, purely in the research phase. But we've done some like modeling for it, and I think it's doable. So I think it's a way to get concentrated liquidity exposure, similar to like Curve, in a fully composable way. That's going to be more passive for investors.
Right. Gotcha. I believe you guys have points ongoing and some incentives such as the Arbitrum incentives right now. Do you want to talk a bit more on that end?
Yeah, so right now we have point system. So we're incentivizing liquidity providing and then the trading the perp options. So you get 2x points for the notional position. And then we have point boost for providing liquidity for certain pools, like all the LRT pools, and then some other pools, that we like want to get more liquidity into for whatever reason. So you can see those all on the interface. And actually, we showcase all the points you could get by providing liquidity. So like, the EtherFi points, EigenLayer points, etc. It's all available on the pools page. And then, those points, like other protocols, are going to be meaningful later when we TG. So it's a good way to get involved as an extra incentive with the protocol right now. And then once we launch our token, the points program is going to end. We're not going to have, more seasons like these other protocols. We're going to be incentivizing moving forward after that with liquidity mining on the pools. So it's going to be a different incentive scheme, but more kind of, traditional in that sense.
Right, gotcha. And how long has the points program been running for? And have you guys announced when it would be ending?
Yeah, so it's been running since end of January or beginning of February, around that time. Mm-hmm. So I guess about 6 months now. And we're planning on TGing hopefully like the first week of August. So that's when the points program, it'll end whenever TG is, but we're hoping for TG to be in early August.
Gotcha. And my next question is there like any token alpha you can share on the Gammaswap token? Utility, tokenomics, things like that?
Yes. We've talked about our tokenomics. We wrote an article about it. So essentially the way the token is going to work is that it's similar to like GMX tokenomics. So there's going to be escrow tokens. You can stake GS for ETH protocol revenue, multiplier points to increase that, and then extra SGS. I think the thing that we kind of realized is we launched the ARB incentives with a 6-month vest, and we thought it would be kind of fine because GMX did a year. But I think the difference is that GMX did it with GLP, which was mostly a mix of like stables and blue chips. While for us, LPs have some IL risk. Mm-hmm. So we're going to be decreasing the vesting most likely to 30 days when we actually launch our token. So it should be better for people who want to participate and don't want to be stuck in a long vesting schedule. So that's something new. But essentially our tokenomics are going to stay the same and be similar to GMX, but with much shorter vesting because, I think providing liquidity in pools it's a different risk profile than something like GLP.
Right, gotcha. And you mentioned risk involved. What are some of the risks that users should be aware of when using Gammaswap?
Yeah, so we talked a little bit about the risks of providing liquidity. Mm-hmm. I think, the biggest one is a permanent loss. And then, of course, if you hold any two assets, you have price risk on those, delta risk on those. But that's normal. Every protocol's like that, I guess. So trading the other thing we haven't talked about is trading the perpetual options. Talked a little bit about it. So there's different risks with trading those. So we mentioned there is liquidations, but they're based on time. They're not based on price. I think not a problem, but one thing to be aware of is that unlike a liquidation price, that time to liquidation is variable. So if the borrow rate rapidly increases, that could change your time to liquidation. So it's good to look at like the historical borrow APRs when opening a position. And then, you have the rate risk, the borrow rate can change. That's pretty similar to other derivatives protocols. And those are the main risks for trading perpetual options. You don't have the same price risk, price-based liquidation risk. So it's mostly just the liquidation time risk. But I think the important thing is to realize that it's variable. It's not fixed, unlike other types of derivatives products. So if you're trading those, just be aware of that.
All right, awesome. And what else can we expect from Gammaswap in the coming near to long-term future?
Yeah, so I mean, we have so many things we want to work on. So hopefully we'll have other protocols that they can just execute some of our ideas in the future, like partner protocols, like how GMX has done it. But some of these things we need to do ourselves because I think it's just going to make more sense. So one of those is like, that kind of fixed delta product, which is more like a traditional call or put. It's going to look a lot like a perp feature if you're just longing or shorting one token. And the leverage is going to stay the same for most of the price, unless it moves against you a lot, and then you're a little bit protected. So it's kind of cool like that. And no liquidation price risk. So that's the one we're planning on launching with right after TGE. And we're going to increase the leverage up to like 10 or 15x. Right now, the max initial leverage is like 1 to 3x. The way we're going to be doing that actually is using a unique lending market on Gammaswap to essentially reduce the collateral requirements for that. And that's how we're increasing the leverage without the IL. And then we want to create some initial vaults that would automatically hedge IL for users or hedge the delta using the positions, like be delta neutral. We don't want that to be like our main protocol, but we'll create some of those maybe initial implementations. And then you could serve as a base for other protocols who want to do that, or people who are launching their own token and want to incentivize those or have people help provide liquidity into those. And then, V2 is going to be the biggest thing after that. And then, once we have the concentrated liquidity, I think once we're in that position, some other types of products can make sense. You could create a stable coin out of Gammaswap. You could create, different types of structured products using perpetual features and Gammaswap options. There's a lot of different things you could do. But, making sure the base protocol is strong and getting good usage is the most important thing. So that's what we're focused on initially. And then once we have that, supporting partners who want to build on us with these unique types of products would be, I mean, it'll be a focus as we build those things, but we could be 100% focused on it after that. Who knows? We might come up with other new things, but these are the things we have in mind now that we're building towards.
Gotcha. That's a lot of milestones for you guys to hit. And on that note, what does the end goal look like for Gammaswap?
Yeah, that's a good question. I think, well, our thesis is that if people could, buy insurance on any token or LP position, it'll increase on-chain liquidity. So, our goal is that we can dramatically increase on-chain liquidity and, eventually DeFi making it, basically like a no-brainer to over sexes, right? I think there's other things that need to happen for that, right? Like more, infrastructure, more, I think intents are supporting that and all these other new products that are going to come out. But we would like to be one piece of that. And I think part of that is, making it easier for people to participate in providing liquidity and creating liquidity while being able to, reduce their downside. So, and then I think if we can create the right product, similar to how options are a super popular product in TradFi, be competitive with perpetual features on chain or maybe even potentially larger since we have more markets. But I think we're a bit away from that, still figuring out, exactly the right product and how to make it as capital efficient as possible while, making it accessible for liquidity providers. So that would be the end goal we're working towards.
Awesome. Yeah, it does sound really interesting to hear what is possible with Gammaswap, especially as you guys ship new features out and like V2 coming up. So I think there's lots to look forward to for Gammaswap. I think I have seen a lot of interesting strategies being posted on Twitter, I think from your account, from Gammaswap account, and some other users as well. So that's something to keep an eye out for. And it's been real nice chatting to you and hearing more about Gammaswap and yourself. Before we go off, is there anything that we might have missed that you want to talk about?
No, I think that's it. Yeah, I think, just want to thank you for hosting us and anyone who, has questions about Gammaswap or, wants to get involved, always feel free to ping me or anyone else in the Discord or on Twitter. We try to respond to everyone, relatively quickly and always feel free to give feedback on what we're doing. I want to make sure our protocol is competitive and interesting for users as possible. And give Luce a follow. He's been putting out a lot of content on his podcast, having interesting guests on, and does a lot of interesting kind of research on different protocols. So I think he's a good person to follow as well on socials and YouTube.
Thanks, man. Right, and for those who are listening, as usual, all the links will be down below in the description box for Gammaswap website, Twitter, docs, and of course for Devin's Twitter account as well. So do check it out below. And that is all we have for this episode. We will see you in the next episode. Thanks, Devin.
Yeah, thank you.
And that brings us to the end of this episode of Moose Meets. I hope you enjoyed learning more about them as much as I did. Let me know which other projects you would like to learn more about in the comments down below. As usual, do remember to hit the thumbs up and subscribe to the pod. We will see you in the next episode.